Traders at UBA expect to emerge as bearish buyers for the rest of this week at the Treasury Bills Market as investors also focus on the 2027 to 2038 bond. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates. Chuka, thank you so much for joining us on the show today. We've highlighted earlier on this is the last trading day for the month of January. Let's talk about activities as we're wrapping up January and what to expect in February.
Thank you, David. Good afternoon. It's been an eventful week. The week started on Monday with bond auction, much anticipated bond auction. So we saw 4 maturities on offer, reissue 2027, 2029, 2033, and then the 2038. We saw that rate was maintained in all the 3 maturities, the 29, 33, and then 28 at 15.5, 16, and then 16.5 as well. Well over 600 billion was offered, and about 618 billion was sold. This auction also was more interesting because FAC came in. FAC came in on Friday. Well over 101 trillion was shared among all the 3 kettles of government, and so the system liquidity was greatly improved, was highly buoyant by this FAC inflows. So we saw system liquidity well over 450 billion. Still on that same Monday, OMO was offered as well. We saw well over 350 billion was offered and sold. Incidentally, about over 500 billion was the subscription, though we saw about 50% drop, at the longer end of the curve from 17.5 to 17%, and that actually has been the activity in the market so far this week.
Okay, now, Chuka, let's also talk about the FX market as well, how things are panning out. Talk to us about today's rates. Yesterday, we saw that major dip, 1,482 naira to the greenback, and also the new circular from the Central Bank of Nigeria as well to curb FX speculation and hoarding. How will this bolster market sentiment in terms of the swing of the FX?
Well, the FX rate has been, there's been a depreciation from the previous day. We saw about, it's currently, like you rightly mentioned, that trading around 1,481, from the previous day close of 1,370. So, the thing about FX, as is widely known, is all about supply and demand. So the supply is still very limited, and demand is still hugely inflated, and that's what is causing the depreciation. And we're obviously going to see this. However, CBN has greatly intervened. Early this week, about 500 million was injected into the system, and then, of course, they've also been meeting up the demand. They just recently cleared out the huge demand from the foreign airline, which has been causing a lot of issues in the system. And so this will definitely boost the confidence in the system, and then obviously will improve liquidity.
And talking about liquidity as well, we anticipate that things will be elevated at least for a while. But let's talk about investor leanings across the T-bills and bond curve. What should we expect come February?
So for the T-bills, we expect to see everything is still centered around the MPC meeting. It's expected that there will be a rate hike, and so investors will be looking at that keenly. So currently, there's been a slight indication, from the bond side, especially with the bond auction that just came out. You could see that the rates were maintained, but it's an indication that the rate obviously will go up. So we see these 16.5 levels, on the longer end of the curve. So my expectation going into February is that we will see rate yield move significantly, especially on the T-bill side, the 1 year especially, and then the bond side, we expect to see around the 16, 17 levels on the longer end of the curve. But then all eyes is still on MPC meeting.
And talking about where we have our eyes fixed as well, we're also looking and waiting for Jerome Powell, the U.S. Federal Reserve Chair, on the monetary policy direction for the United States. Some say we might likely see a hold on rates. This definitely would also impact how market directions will also go for African markets. What's your expectation, though?
Yeah, it's expected that the Federal Reserve will hold rate, and then that will actually have some impact in the emerging market, especially ours. And so, you know, whatever happens in that market will greatly, largely affect our own market, and I expect that investors will be also watching it cleanly, especially when you see that the Nigerian MPC meeting is coming up, and then there's a risk rate hike expectation. You know, investors are always you know, on the lookout for monetary policy meetings, and this will obviously affect their decision.
Well, we'll definitely keep tabs on the meetings as they come through from the U.S. Federal Reserve. Thank you so much for your time on the show today, Chuka.
Thank you.
Well, that was Chuka Nwachukwu, head of ALM and Balance Sheet Management at the United Bank for Africa.